Hey all, welcome to the next series of with GMT. So, you are ever wonder about the terms used under the equity debenture bond or private equity hedge funds? There are many terms. Okay, so we design one series is a financial series on which we discuss on the various terms. So in this series, we'll break down the complex financial term into the simple and relate with a real example, real life example, whether a beginner or maybe the pro in this industry. You can use this series as a one stop guide when you're traveling or when you're doing something. You can visit this because every session will cover 5 to 7 minutes only, or max to 10 minutes according to topic. So do not forget, if you do not subscribe till now, just subscribe now and hit the like button as well after listening this, because today we'll discuss on the topic of amalgamation, and we have thousands of topic in the financial sector we'll discuss on this series. So first example is amalgamation. Okay, if you have 10 second, you can take a 10-second and draft your answer, and then we'll go with our example. So how it impact example, and then how we can learn into easy way. Okay, so amalgamation is a term where two or more companies, organization, or something join together and create one entity. Because before they have separate entity, now they combine two or more organization come together and create one entity through the term like merger, acquisition, or demerger. You have heard about this term, but this term upper hand come with the amalgamation. So how it relate, we'll see in this session. Okay, so key features: integration of asset and liability. If two or more company join together, so it's create a integration between asset and liability as well. So legal process require approval from the stakeholder and the regulatory body. Regulatory body may be CB, NSC, or maybe clearing corporation, or maybe depository participant, or maybe some legal expert as well. Or stakeholder are something like equity holder, or maybe debenture holder or bond holder. Somebody take approval from that side. Transfer of ownership. The shareholder of merging company are compensated in the cash, share, or mix. Maybe the who is getting transfer, who somebody get a cash or new company share, or get a mix of that, means half cash and half share. So definition is something, if you want to explain your interview section also, so you can explain like that. Definition means new entity formation. Absorption means the old company merge with new, the old company get absorbed with the new company, that's why it is absorption. Economic of scale means if this both company are the in the vertical of a same business, so they acquire in the same business, so economic of scale, they will sell their product or they will produce some product into economic of scale, means is friendly for the economic, socials, and the inflation, or maybe you can take any example. Okay, tax benefit as well, and market expansion means they are play the monopoly role also. So key features are the small only: the integration between the asset and liability, the legal process, and the ownership, transfer of ownership, because new to old. The process, stakeholder approval, regulatory, and compensation benefit. So type of the amalgamation is a nature of a merger, means is merged with this. Okay, so combine entity with a similar objective and operation. Synergies means what I have explained you. If somebody into the part of a vertical business of making some product, like for example, we take example of SBI. So SBI merged with the SBI Bank of Jammu Kashmir and some two banks as well. I'm not remembering the name. You can search into Google and then you can find it. So they are into same business and they want to follow the same entity because they want to when they estimate their profit loss or maybe regulatory thing. So one page they all banks should perform. That's why they do the this thing. Amalgamation in nature of purchase means in nature of purchase as well is done. One company acquire another, treating it as acquisition. First part is upper, if we say first part of SBI they merge with bank, between various bank, and the second part they will acquire, like acquisition of Flipkart by the Walmart. The Walmart acquire the Flipkart. So this is a part. So how you pass the journal entry for the amalgamation? Okay, so record purchase consideration, business purchase account debit and vendor account get credit. For transfer of asset and liability, means sundry account debit to sundry creditors to business partner credit. So this is a combination of entries. Sometimes it will confuse you, but we have covered into this section as well. Under the nature of merger, pooling method involves combining the asset and liability without creating goodwill. So it's combine the asset and liability without creating the goodwill. Sometimes tricky question will be as if goodwill add or not. So it is not adding into the amalgamation sector. Impact of financial statement of amalgamation. So in the balance sheet, the expansion of a asset and liability consolidation lead to the large asset base. So means one company merge or maybe acquire, so there is a huge asset and liability will be there, and the consolidation will take a large asset base also. Sometimes it will go to company valuation as well. So profit and loss, one time cost, legal, consultancy and integration cost, and synergy benefit long term will be there. Okay, so one time cost will be there according to the whatever the legal consultancy and the something, and it will be better to do because long term cost reduction and revenue improvement as well. If one company is doing and both company mix to doing if in same vertical, so they will generate a high return, high revenue, and it is long term win-win situation for them as well. So in equity, ensure of a share effect by the shareholder pattern. So balance sheet, expansion of a asset, expansion of a liability. Okay, so both will be expand. Profit and loss, one time cost, synergy benefit. So profit and loss, one time cost will be reduced like legal and whatever the charge they have mentioned like consultancy, integration cost, or maybe something charge will be recorded in profit and loss. And equity, insurance of shares, means they everybody should get the shares, or if share they are not doing, the cash will be distributed to the equity shareholder something. And shareholder pattern change means if share is 100 rupees traded before the different company, now they merge, the price will be get change, or maybe some face value get change, or maybe the quantity of a share they are holding may be changed. So according to the it will change. So we come with an example, a second example here. So you can relate with this example. This is Tata Steel and Bhushan Steel 2008 scenario is there. Why? To strengthen the Tata Steel market. So Bhushan Steel and Tata Steel are the same segment, means they are in the vertical of same only. So they are making the strain. The Tata Steel buy to the Bhushan Steel acquisition of 35,200 crore under the insolvency, means Bhushan Steel facing some financial crisis. So Tata Steel buy his plant with asset liability what he is carrying and shareholder pattern as well, and the same Bhushan Steel who is holding the shares is converted into Tata Steel according to the ratios what price they have, and then it will be treated. So if you want the detailed thing, you can just comment us, we will draft something, we will provide a note on this part as well, and you can google it out and you can find on this part as well. So important of amalgamation. So growth opportunity, expand market reach, means if if Tata Steel cannot reach to the particular segment, particular state or particular country, so with the help of Bhushan Steel and all his asset, and he make a large production, and he can reach to the various part as well. So cost efficiency, share resources, reduce operation cost as well. So if resources are shared, it reduces the operation cost. The technology what Bhushan Steel is using and Tata is still using, they share among them both, and then they find a better technology, better strategy to produce or some operation, save some operation cost as well. So it save the tax benefit as well. Additional term like amalgamation include merger, acquisition, and demerger. Shortly and steadily will form a separate video on this term as well. But as of now, as a part of a financial term explanation, this is enough detail that we have produced. If you want anything, you can directly comment us on our comment section. We'll definitely draft for you. So thank you so much for watching. We'll meet you on the next part. Thank you.